Hi, Hugh Lopdell here from Oak Park Chartered Accountants. This is my third COVID update video for our small business clients, for anyone else around the country that wants some advice and wants to tune in. We're at the end of 6 weeks of lockdown as I tape this, and it's now getting critical for hospitality and retail businesses in particular, and some others. Spare a thought for tourism related businesses. They are really hurting and they don't have so much hope on the horizon. It's going to be a long cold winter for them. Today I'm going to update you on measures provided by the government since my last video, including some tax changes, along with some advice on reopening your business in level 2. I'm going to start with a small business cash flow loan scheme. Now the government will provide loans to businesses on quite generous terms commencing soon. It was designed to take up the slack where viable businesses were being turned down by banks for loans because they didn't meet the bank's collateral and servicing requirements. To qualify, a business must have 50 or fewer FTE employees. It must be a viable business, and it must meet the wage subsidy requirements. So you'll remember the turnover's down 30% due to COVID. And I presume it also means you keep your employees employed, but watch this space, that's not 100% clear. Now, qualifying businesses can borrow $10,000 per business plus $1,800 per full-time equivalent employee. The loans are interest-free if they're repaid within a year. Outside of that, the interest rate is 3% and it's for a maximum of 5 years. Repayments are not required in the first 2 years. It's going to be administered by IRD, and you apply on your My IR login. And on application, you will enter into a binding loan agreement with the government. IRD expect that applications will be able to be made from the 12th of May. Now, it is a good scheme. However, it is debt that will need to be repaid. So I recommend that before you apply, you talk to us about having us do a budget for you so that you can plan to repay it. Remember, we're still offering clients budget preparation at no charge if it is due to COVID. All right, the tax loss carryback scheme. Some clients have asked me about this. The government has attempted to provide immediate cash flow assistance through allowing businesses who make a loss in the current year, that is the 2021 financial year that's just begun, to offset that loss backwards against their 2020 year profit. That's last year's profit. Now, normally losses can only be carried forward, not backwards. Their intention was that many businesses would, through this measure, get tax refunds of their 2020 provisional tax, or not have to pay their last provisional tax installment due on 7th of May. However, a loss means that not only did the business not make a profit, but you as owner didn't pay yourself a salary either. That means you worked for the business for nothing in addition to the business making nothing. Now, you don't pay yourself a salary that will get taxed, and in doing so put your company into a loss situation just so that you can claim the loss. It just doesn't make sense. It gets you nowhere. So I think this move in the end will assist larger tourism-based companies like Air New Zealand, but it will give SMEs little or no relief. SMEs have a very small capital base, so they don't have big lines of credit, large assets to borrow against, or pockets of cash. If they make losses, and by that I mean the owner doesn't even take a wage, they don't trade on, they close down. In his press release on the 30th of April, the Revenue Minister said this measure would give a significant and early cash lifeline for SMEs. I'm sorry, Minister, unless I'm missing something big, it absolutely won't do that. I reviewed this measure for our entire client base, all of them SMEs, and not even the most at-risk client we have will be able to use it. So sadly, this one's not a well thought out measure in my view. Low value assets. Now, this is a much better targeted tax measure by the government. So, for a year from the 17th of March 2020, so it's effectively for the 2021 tax year, any assets purchased up to $5,000 can be expensed, gaining immediate tax deduction. instead of being depreciated. So previously, the threshold was $500. So assets costing up to $500 could be immediately expensed. So the government is saying this will incentivise businesses to bring forward investments and encourage their spending, and they're right about that. If you purchased any assets up to $5,000 between the 17th of March and the 31st of March this year, you'll get that enhanced tax deduction in the last financial year. Now, tax payments. I covered this in my last video. If you can't pay your taxes, so on the 7th of May, your GST and provisional tax, or if you still haven't paid your terminal tax due 7th of April, and it's because of COVID, IRD will write off your interest and penalties on application. If you can't pay either, call them for an instalment or tell us what's going on, and we'll assist you to plan for this repayment down the track, along with a letter to IRD to remit those penalties and interest, which is at no charge if you're a client of ours. Now, the wage subsidy. I've spoken a lot about this. The criteria are now well known, and I've covered them in my previous videos. A few developments though. Under level 3 construction businesses are now back at work, and that must feel great. Some are finding it quiet because projects have gone on hold. Others, with a backup of work and half-finished projects, are flat out. In level 2, hopefully, the cities are going to repopulate and hospitality and retail will be back open. If you are one of these business types, you will have claimed the wage subsidy already, and you've hopefully got a written agreement with your employees to reduce their staff hours to 80% of normal hours or less if you were unable to pay 80%. Now, once you're back trading, you should be restoring people's pay as your trading allows. Now, there are no rules as to when you have to lift their pay back to 100%. It is up to you to decide and to agree with staff. In hospitality, for example, if after we're back to level 2, trade takes a while to pick up, you'll want to keep your wages in line with turnover. For example, say trade only picks up to 80% of what it was before and stays there. For example, because a portion of the city's employees keep working from home for a while or even permanently, then you will need to be prepared for this. So keeping staff at 80% of normal pay will not be sustainable for them, and you're probably going to have to look at trimming your staffing. That's a redundancy situation, and you'd better call me or your lawyer before you proceed with that, because there's a strict legal process for redundancies. Remember too, any layoffs within the 12-week period will mean that you have to repay that a portion of your wage subsidy. So have a plan with what you're going to do with staffing if trade doesn't pick up quickly under level 2. Clawback. Now, our clients that I've talked to were sensible, placed their wage subsidy in a savings account and are transferring it out of there to pay wages. Now, if your agreement was to pay the wage subsidy of $585 gross for full time, you still should have half left, right? We're only halfway through the 12-week period. If you agreed to pay 80% of their normal pay, then your money could be nearly gone. Now, the requirements of the wage subsidy say that you must use it to pay wages. As long as you use what's remaining of the subsidy money to pay wages only, and you keep your staff employed for 12 weeks, there is no clawback of the subsidy. If a staff member left that you claimed the subsidy for, you don't have to repay that subsidy or part of it, as long as you use that money to pay other staff's wages. Now, the wages subsidy is still available, unaltered. So if somehow you have qualified, but have not claimed it already, you still can. Now, between $10 and $11 billion have been paid out on the wage subsidy. And 97% of businesses who claimed the subsidy were SMEs. That's fewer than 20 employees. My estimation is that somewhere between 10 and 15% of SMEs have claimed it didn't qualify or didn't continue to qualify and therefore will need to repay it. So these are businesses that feared they may be down 30% or more on turnover, but then it transpired in the end they weren't, or who were down 30% or more on turnover, but it wasn't due to COVID, or they've laid off staff after claiming the subsidy for those staff. And that's not even factoring in the inevitable small portion, unfortunately, of fraudulent claims that there will have been. It was always likely that given the high trust model the government used and people's natural fear factor, that some business people claimed an error. If you realise that is you, I recommend put it aside and we'll sort out a repayment plan for you a bit later on. Now, rent. I've covered this in my last video. For retailers, hospitality, hairdressers, etc., obtaining rent relief is critical to your survival. However, not all landlords have been nice. If you are one of the business types and you've asked but received no support from your landlord, call me. I'll ask again for you if you're a client of ours. Again, no charge. A restaurant client asked me for this kind of help last week, and I was able to get agreement from the landlord to a 50% reduction over 3 months. Critical for him. Call me if you need that help. Landlords, remember, have been given some cash flow wriggle room. They can claim a mortgage holiday and depreciate their buildings. So if necessary, you can remind them of this, or call me and I'll remind them. All right, leases. Now, the government has attempted to give lease relief through changes to the laws regarding commercial leases. They've extended the notice period that landlords must give tenants before evicting them for non-payment. Extended that notice period from 10 days to 30 working days. Now, the bill also extends the notice period before a bank can repossess or sell a mortgaged commercial property from 20 working days to 40 working days. Now, these measures cover extreme situations, and very few commercial landlords and tenants, in my view, will need to use these measures. So it comes back to talking. Tenants talk with your landlords, landlords talk with your bank. All right, well, that's all for now. Good luck in the transition to level 2. Call us if you need us. Remember, there's no charge for this COVID help. Hugh Lopdell from Oak Park Chartered Accountants signing off.